You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion. Delivered by conflicting media reports, we connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender right here on Ron Siegel Radio. I think I've got it there.
Welcome back.
Coach Travis, how are you today?
I'm great. How are you, Ron?
Doing wonderful, thanks. Let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. I think I need a yawn button for this one, Josh. I don't know if we have a yawn button on our board. National Coffee Day. That would be a day that ends in Y. I mean, is there any day that we don't have coffee? I'm curious about that. No whipped cream on this coffee. I noticed that, but that's okay. By the time I get to the studio in the morning, I think I've probably had 3 or 4 cups of coffee. It used to be 3 or 4 pots, but I have a problem because the restrooms are down the hall. Our breaks aren't long enough, but I digress. Let's move right along. VFW Day. Yeah, well, we always have to celebrate our veterans, so always appreciative of the veterans. VFW Day is today as well. Do we want to look at the markets today? I know that, I think roller coasters, I guess, would be the theme. Dow Jones Industrial Average today is down 368 points. If you've been watching the markets for the last week or so, I mean, I look at the chart of a 5-day chart of the markets, and it would make one heck of a roller coaster. I'm not even sure Magic Mountain could handle this one, but it's pretty crazy. The S&P 500 is down 65. The NASDAQ is down 280 points. Oil up 34 cents a barrel, continuing our rapid rise. I don't know what's going on here, but if you look a week ago or a month ago, we were at, I guess it's not that big a deal. A month ago, we were at 385 a gallon. Today, we're at 376 a gallon. That would be the national average. That would not be for us in California because we're paying $6.04 a gallon is the average price of a gallon of gasoline in California. $6.04. About $1.20 of it goes for Gavin's giveaways. So we just throw that in there. We'll talk about Gavin's giveaways in a minute. But Josh over there, he's paying $5.21 a gallon. Josh does have to go to the studio, though, because that would be about a 400-mile drive or 300-mile drive, so wouldn't want to do that. Jody's at $4.23 there in Arizona. Our tremendous underwriter, Lori, $3.11 in Louisiana. And I don't think we have to worry about our friends we have to worry about our friends in Florida for another reason. Got a lot of friends in Florida. Ooh, boy, it's been devastating over there. I did ask a friend of mine yesterday if he would mind sending us a little bit of water. I think they've got an excess of water in Florida. We've got a shortage in California. But it's moving right along. Let's see what's going on. Hopefully the worst is behind them over there in Florida. We are thinking about you if you're watching us on ronsiegelradio.tv or any of our socials. What else is going on in this world? Gavin giving it away again. Another $1 billion. You know, they used to be that we would talk about millions. Now, if it's not $1 billion, who cares? Well, what's he going to do with money this time? It's going to solve the housing shortage. Really?
You know better than that.
So Gavin's solution to everything is let's throw away some money. Now, is it going to work? Obviously not. So he wants to take your shopping centers and make them into affordable housing. He doesn't realize that the problem with building is not as much the money as it is the regulation, right? I mean, you take a shopping center. Do you know what it's going to take to make a shopping center into housing when you do all the environmental studies? And he says it's all shovel ready. Well, it's only shovel ready because he's shoveling a bunch of manure at all of us. And I would use different terminology, but we are on radio and the FTC doesn't like it. But the bottom line is, you know, if you're thinking that his latest gimmick is going to work, no. And Senator Warren, she's got a new gimmick going too. I have shared this idea, but she had to take it to the socialist level. So she wants to get rid of Chapter 7 bankruptcy, Chapter 13 bankruptcy, and she wants to call them Chapter 10. Don't know exactly where she comes out with 10 out of 7 and 13, but she wants to put back in there where you can have student loan debt discharged in bankruptcy. And I've said that that's a good idea. But when she goes along with all of her other garbage that she puts into it, she takes something good and ruins it. Just put the student loan debt back into Chapter 7 and Chapter 13, which President Bush the Younger took out, and it would solve the problem. Why? Well, people don't want to file bankruptcy. They do file bankruptcy. We help them out a lot at creditsanitizer.com because we understand how those laws work. But people don't really want to file bankruptcy. But if they need that safety net, it should be there. The other part is it adds risk back to colleges. When we add the risk back to colleges, they might realize that, you know something, it's not a free lunch any longer. And, you know something, you keep charging people way too much money for some of these things. And, you know something, you're going to have to, you can't just give them a loan and say, okay, I don't care about giving them a loan because I know they can't get it. There's no way out of it. I'm going to get paid. Well, if the schools have some risk, maybe the tuitions won't go up quite as quickly. Just throwing that out there for you. Your Credit Matters segment, though, today, brought to you by creditsanitizer.com. You have a credit report, it is wrong. A little bit of credit education. What is payment history? Payment history shows how you've paid your accounts over the length of your credit. This evidence of repayment is the primary reason why payment history makes up 35% of your score and is a major factor in its calculation. Research shows that your track record of payment tends to be the strongest predictor of likelihood that you'll pay all debts as agreed to. And you can imagine a lender's number one priority is your past record of paying back or not your loans. Few late payments are not automatic score killer, and overall good credit history can outweigh one or two instances of late credit card payments. However, having no late payments in your credit hit report doesn't mean you'll get a perfect score. Your payment history is just one piece of information used in calculating your FICO scores. Types of accounts considered for credit payment history include credit cards, Visa, MasterCard, American Express, Discover, etc. Retail accounts, credit from stores where you shop, like department store credit cards. Installment loans, loans where you make regular payments, like car loans. Finance company accounts, mortgage loans. Public record and collection items, these types of events are considered quite serious, although older items and items with small amounts will count less than recent items or those with larger amounts. Negative factors include bankruptcy. That'll stay on your credit report for 7 to 10 years, depending upon the type. And as long as it meets the criteria, must be complete, it must be accurate, it must be verifiable. If it's not all three, it must come off. Lawsuits, wage attachments. Components that make up your payment history, payment information on credit cards, retail accounts, installment loans, mortgages, and other types of accounts. How overdue delinquent payments are today or may have become in the past. The amount of money still owed on delinquent accounts or collection items. The number of past due items on a credit report. Adverse public records like bankruptcies. The amount of time that's passed since delinquencies, adverse public records, or collection items were introduced. The number of accounts that are being paid as agreed. Tips to enhance your payment history. The tips below might sound a little obvious, but reading them might help give you the push to make that first move. Payment history can be improved upon, but there's only one person who can do that. You. Here's how. Pay bills on time. Get and stay current on missed payments. Contact creditors when you need help. Payment history is the biggest score factor, so it's important to pay close attention to it and make sure your bills are paid on time. If you have any questions about this, give me a call, 800-306-1990. If there are errors on your credit report, and there are because 79% of all credit reports have errors, creditsanitizer.com is the solution, creditsanitizer.com. They'll help you out, and from what I understand right now, they will give you a free credit audit. You do need to pay $1 for a specific credit report for them, but if you can't pay $1 for that, you're in trouble. That is the Credit Matters, your Credit Matters segment brought to you by creditsanitizer.com. You have a credit report that's wrong. What are you doing about it? When we come back, group health insurance, it's that time of year, so we're going to chat about that with Travis Robinson. We've also got a few other interesting stories to chat with you about. Can I assume an existing mortgage during divorce? If you're thinking of selling your house this fall, hire a pro. All that and more. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit RonSiegelRadio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Checking the markets, the S&P 500 is now down almost 70 points. Ugh, not exciting. 10-year Treasury is up 3 basis points, 3.735. Mortgage-backed securities down 22 basis points. That means interest rates are increasing today. And as we do every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked loans across 35% of all mortgage transactions nationwide. Yes, I know Freddie Mac told us today that the mortgages are at 6.7% on a 30-year loan. You have to pay 9/10 to get it, but where do they lock according to OBMMI? 6.643 was the conforming loan. Jumbo 6.294. FHA 6.372, USDA for those rural area loans 6.318, and the best loan on the market for those that earned it would be our 30-year VA loan. 6.336 is where that locked. And why is all of this happening? Well, got the final reading of the second quarter of GDP came in right where we expected it, negative 0.6%. It's now confirmed we had 2 consecutive quarters of negative GDP with a negative 1.6 in the first quarter, negative 0.6 in the second quarter, which by most standards, or at least since 1947, has meant that we are in a recession. But the administration doesn't want to hear that. And the referee, the National Bureau of Economic Research, has not called it a recession yet. We'll see what they have to say. Initial jobless claims measures individuals filing unemployment benefits for the very first time, decreased by 16,000 with a slight negative revision to the previous week. Claims are now back under 200,000. Got to wonder why with all that's going on right now, but that's where the numbers are. CoreLogic released their loan performance insights for July, showing that loans 30 days or more past due increased from 2.9% to 3%. This has increased 0.1%. It's still 1.2% below where it was last year. Loans seriously delinquent or 90 days plus remained 1.3%. Loans in foreclosure remained at 0.3%, which is near multi-decade lows. And we talked about that yesterday. If you missed that with David Childers, you missed a lot. Tomorrow we're going to get the PCE. That's the Fed's favorite measure of inflation. What do you think it's going to be doing? Well, we'll be talking about that. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Well, it's that time of year again. Well, almost. I guess we have 2 more days, maybe 3 days. But we get to talk to Coach Travis Robinson right now. Not here in his coaching capacity. Maybe you are coaching.
No, sir. Not this morning.
Well, but you know something? You coach a lot of people on the football field and when it comes to healthcare.
I guess so. We like to think that we're good at I'm good at coaching, and we're also good at employee benefits. So we coach up business owners, I guess, on employee benefits, group health insurance, save them quite a bit of money and time with our services for sure. Okay, so what's so special about the fourth quarter when it comes in the world of healthcare? Well, in California, 80% of businesses renew their health insurance, dental, vision in the fourth quarter. So it's a busy time because most business owners really don't want to talk to you about their benefits until they're up for renewal.
So they think that you're a magic worker And at renewal time, that's when they want to first start that conversation.
Well, that's when it's going to be important to them, right? They get their renewals in the mail. They're going to get a big increase because everyone gets an increase. Insurance is regulated by the state of California, and it's based off of your home zip code and age. So just by now, every year your insurance is going to go up because your employees potentially get older or are getting older.
So what you're saying then, if I want to save on insurance costs, I need to replace my employees every year with younger people.
Absolutely not. You want to keep good employees, and we can help you retain them with our services, and we can save you money. We're saving new business owners right now around 10 to 20% a month on their insurance.
That's a lot of money.
Sure.
When you think about it, I don't know anybody that when I talk to them about insurance, health insurance, their portion, ranges, and you would know better than me. I always hear somewhere for a full family about $1,200 to $1,500 a month is the employee's portion of it.
Absolutely, that for sure. And then your employer is required to contribute something towards either you or your family. So a lot of our business owners contribute 50 to 80% for their employees, and then also for their dependents. But on average, that's pretty accurate cost for a family of four.
So let's think about that. So let's just go with 1,500 because it's easy math, and
Sure.
I'm a simple guy. And it goes up 10%. That's an extra $150 a month out of your budget,
Right?
not counting the part that our government is helping us with gas prices and everything else that's going up.
Yeah,
so you got to really help out the employees. Now, do most companies, when they call you and you're working with them on a long-term basis, I have to go through and redo all my stuff every year.
Mm-hmm.
Is that because my employer changed organizations that we're going with, or is it because you guys want new and update fresh data, or what? Why do I have to give them all the same stuff every year?
Well, if your broker's doing a good job, he's taking your plans and your employees and that information, and he's sending it out to market, and he's getting custom quotes. A lot of brokers won't do that. Well, we do it every year. We'll take your information. So we want your employees' information, your plan information, stuff that we normally have. If you're our client, we have that for you, and we don't ask for it. So we take it to market and we can quote it. For new clients, if I'm trying to earn your business, I need to retain that information so then I can take it out to market and see about saving you money.
Now, I just spent a couple hours yesterday at a Medicare seminar, and one of the big selling points there was it doesn't matter when you talk to the Medicare broker,
mm-hmm.
It's irrelevant who you go with because they're compensated by the insurance companies.
Correct.
And regardless of what insurance company you go with on Medicare, the comp is the same.
That's the same for us.
Same thing. Okay.
Same thing for us. It's regulated by the state of California. We get a flat percentage, but what makes us different is the added value and services that we provide at zero cost.
So you're taking that flat percentage, and let's just say it's $10.
Okay.
And it doesn't matter what it is; it's irrelevant. You're taking that $10 and you're saying, okay, I don't need all of that for myself. I can get a lot of $10
mm-hmm.
by giving $1 or $2 back, or $3 or $10, $5, whatever it is.
Sure.
Is that what you're talking
about?
So
we take our commissions, and we're very upfront with what we earn from our clients, and we reinvest that back into. We provide sexual harassment training for all of our clients. We do employee handbooks, reviews, and updates, which should be done annually, and we don't charge for that. Paperless enrollments, we provide that for all of our clients. There's a whole list. We have over 1,000 hours of trainings that we can provide for your employees.
That's a big benefit,
mm-hmm.
because we've got to do it as a company, or else we're liable.
Yes. And
part of the problem is my guess is if you're a small business owner, you don't even know what you're liable for. I know when I owned my own business, I just have to pay a lot of different people. My CPA would give us some input on it, and that wasn't at an hourly rate. And
yeah, for sure.
Right? You had consultants, and you had all these others, and you're saying that, well, you've got a lot of this knowledge that you're sharing, coaching a business owner with.
Well, we're not experts at it, but we pay to have it done. So I don't do employee handbook review. We pay to have it done for our clients, but we don't ask our clients to pay for that. Like I said, we take their commission and we reinvest it back into our clients.
But my guess is that if you're going out to XYZ company to do a employee handbook review,
yep.
you guys have more clout than going as a agency with 5 companies, as opposed to me going by myself.
Correct. Right. Absolutely.
And you may be able to create one handbook for everybody. That may have some subtle changes, or one template. Is that how basically they work?
Well, there's a lot of different changes. So if you have employees that are in a warehouse or employees that all work from home, so it is absolutely different for every single employee.
Okay.
So we update those based off of your information and your business model. So your employee handbook is 100% customized to you.
Okay. And you already have all that information that they're going to want, because you already know which people are warehouse workers, and which people are office, and which people are exec or stay at home, or whatever the whole bit is.
It'll take usually an hour phone call for us to go through and help them and really understand the business, because there are some things that we don't know, and we want to make sure their employee handbooks are up to date and compliant.
That's a key word right there, right? So you want to make sure that it's compliant, because and especially in California, the business owner is always wrong.
Well, right. And with COVID, right now, if your employee handbook hasn't been looked at in the last 6 months, it's out of compliance.
Really?
For sure.
Wow.
Yeah.
Okay, so that's a big issue right there. So now, when do you do that? Are you doing those meetings only at the end of the year as well, or are those done throughout the year?
No, we'll do them when anyone wants to have if your employee handbook hasn't been looked at, we will absolutely review it today, tomorrow, 6 months from now. So, but if you're our client, we make sure that it's reviewed on an annual basis and updated and provided to you. Your employees need to be signing them annually and reviewing them and signing them. So we do that digitally. So we're not killing any trees, and it's just makes it very fast and efficient for the groups.
Environmentally friendly.
Absolutely.
Nice. Okay, so what's so as an employee, does it matter to me who my employer goes with for these kind of services? Or do I have any input even in it?
As an employee, no, you wouldn't have any input. But what makes it nice for the employees is they're given our information, and they don't have to go to their boss and ask certain questions. They contact us directly. So it would make a difference as an employee, because you get personalized. You can call us night or day, and we can answer questions for you based off of your what your benefits are.
Now, let me ask you this, because we get a lot of real estate professionals listening to Ron Siegel Radio. So let me ask you this question. Does a group healthcare plan have to be an employer arrangement, or can it be like a co-op? It's like I'm saying, in real estate, you get a bunch of people, you get 80 people in an office. There might be 3 of them are employees, and the rest are all 1099 employees. Can they band together and call you for services, or do they have to?
You'd have to be on you'd have to be a W-2 employee.
Gotta be, okay, so group health is based on W-2 employees only.
Correct.
Gotcha. Okay. And what about does it matter whether all the employees are local, or can they be in different states?
No, they can be. We have a lot of businesses that are their headquarters are in California, but they have employees all over the United States. So it doesn't matter. Your plan design will be different for those employees, but that's something we specialize in. So we make sure that we have that taken care of as far as networks and where you're located.
Great information. We're going to continue our conversation with Travis Robinson when we come back. We'll also talk about, if you're thinking of selling your house this fall, hire a pro. Can I assume the existing mortgage during divorce? All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. If you're thinking of selling your house this fall, hire a pro. Interesting. Today's market is at a turning point, making it more essential than ever to work with a real estate professional. Not only will a trusted real estate advisor keep you updated and help you make the best decisions based on current market trends, but they're also experts in managing the many aspects of selling your house. Here are 5 key reasons why working with a real estate professional makes sense today. Number 1, a professional follows the latest market trends. With higher mortgage rates and moderating buyer demand, conditions are changing, and staying on top of the latest market information is crucial when you sell. Working with an expert real estate advisor helps ensure you can stay updated on what's happening. They know your local area and follow national trends too. More importantly, they'll know what this data means for you. And as the market shifts, they'll be able to help you navigate it and make your best decision. Number 2, a professional helps maximize your pool of borrowers. Your agent's role in bringing in borrowers is important. Real estate professionals have a large variety of tools at their disposal, such as social media followers, agency resources, and the multiple listing service, MLS, to ensure your house is viewed by the most buyers. Investopedia explains why it's risky to sell on your own without the network of agent provides. Quote, you don't have relationships with clients, other agents, or real estate agency to bring the largest pool of potential buyers to your home. A smaller pool of potential buyers means less demand for your property, which can translate into waiting longer to sell your home and possibly not getting as much money as your house is worth, unquote. Number 3, a professional understands the fine print. Today, more disclosures and regulations are mandatory when selling a house. That means the number of legal documents you'll need to juggle is growing. The National Association of Realtors, NARS, explains it this way, quote, selling a home typically requires a variety of forms, reports, disclosures, and other legal and financial documents. Also, there's a lot of jargon involved in a real estate transaction. You want to work with a professional who can speak the language, unquote. A real estate professional knows exactly what needs to happen, what all the fine print means, easy for me to say, and how to work through it efficiently. They'll help you review the documents and avoid any costly missteps that could occur if you try to handle them on your own. Number 4, a professional is a trained negotiator. If you sell without a professional, you'll also be solely responsible for all the negotiations. That means you'll have to coordinate with the buyer, the buyer's agent, the inspection company, the appraiser. In today's changing market, buyers are regaining some negotiating power as bidding wars ease. Instead of going toe-to-toe with all the above parties alone, lean on an expert. They'll know what levers to pull, how to address everyone's concerns, and when you may want to get a second opinion. Number 5, a professional knows how to set the right price for your house. If you sell your house on your own, you may be more likely to overshoot the asking price. That could mean your house will sit on the market because you priced it too high for what the market is now. Today, pricing a house requires even more expertise to ensure you get it right. NAR explains it like this, quote, a great real estate agent will look at your home with an unbiased eye, providing you with information you need to enhance marketability and maximize price, unquote. Real estate professionals know the ins and outs of how to price your house accurately and competitively. To do so, they compare your house to recently sold homes in your area and factor in the current condition of your home. These steps are key to making sure it's set to move quickly while still getting the highest possible final price. Bottom line, whether it's following local and national trends and guiding you through a shifting market or pricing your house right, a real estate agent has essential insights you'll want to rely on throughout the transaction. Don't go it alone. If you plan on selling your house, let's chat. And if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, give them our number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. That is the real-time real estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Continue our conversation. Travis Robinson is with us today. Maxwell Agency, talking about group health care. That's our subject this morning. And I know if you're out in the Inland Empire listening to us, there's probably a lot of warehousing, a lot of distribution companies. You might want to give Travis a call. If you can save some money, that goes right to the bottom line. I always look at it. Hey, Travis, I used to have a 3-strike rule. And you're I don't know if we've talked about that before on the broadcast with you, but I know I had a CPA, and we had one part of the firm dealt with business accounting and growing the business.
Right.
The other part of the firm was the tax part. Well, the business growth part said every one of your professionals needs to come to you with a way of making more profit, recognizable and quantitative profit.
Sure.
And if they come to you 3 times and they don't bring profit ideas to you, they're out. Strike out.
Right.
Get someone new.
Mm-hmm.
Because you guys, like me, you're out there talking to people all day, every day.
Yep.
And you're finding out what people and what businesses need. If you're not sharing it, I need to find somebody that is.
Absolutely. Yep.
Right. So when in the last segment, we were talking about the employee handbooks and needing to have those every 6 months, that could potentially save me a boatload of money.
Sure. Absolutely. Compliance is a big thing, and employee handbooks need to be reviewed annually. So, but I'm saying if with COVID and the new rules and restrictions that were put into place, if your employee handbook hasn't been reviewed, it's probably out of compliance. And it hasn't been reviewed in 12 months, it's 100% out of compliance.
Okay. So what else? I mean, we're going into open enrollment time or getting close to that.
Yeah.
As a business owner, what do I need to do what are the things I need to be asking you to see if your company is better than the next company?
Well, I think a lot of our groups and people that we're talking to are having problems retaining and keeping talent, right? Keeping employees, the work ethics or habits of people have changed a little bit. So they want maybe a little bit more from an employer. So keeping employees and retaining them is huge. And one of the tools that we use is a total compensation statement. We refer to it as the hidden paycheck. And it basically shows your employees everything that the employer is doing for them. So it takes their wage and then what the employer is also contributing towards their health insurance, dental, vision, 401k, what they're paying into workers' comp. So it takes that, and we can generate these for employers in about, if we have all their information, we can do it for them in 24 hours. So, and again, there's no charge for that. We do it complimentary, or if we do it for our clients.
How often should I be giving that out to my employees if I'm the business owner?
Well, annual reviews, we have a lot of our groups use them for annual reviews, or they use them if they're trying to get someone hired. They can put that information into a total compensation statement and then at an interview, or if they're trying to offer a job to someone, they can say, here's your compensation. You're not only making $80,000 a year or $120,000 a year with your benefits and what we pay for your health, dental, vision, 401k. This is what you're really making. So, yeah. So we have them. I've got a sample here. You can't really see it on the radio, but I can send out samples to anyone that would like to see this, and we'll do it at no cost.
So give us a call at 800-306-1990. I'll put you in touch with Travis so you can actually see that. I'm looking at it. Nice, pretty picture on there on the front, and
it's a lot of information.
It's a real professional looking document that you'd be very, very pleased to have representing your company.
Absolutely. Yeah. And again, it's all digital. We can do it very fast and easy. As long as we have the information, we plug it in and it spits it out, and they're customized to every single employee. Because again, your benefits are going to be different based off of your salary, your age, your home zip code. So it's not something that you can just put together real quick. But if we have your information, your employees' information, you have 100 employees, we can do these in 24 hours. It's going to save you a ton of time and money.
Seems to me like that'd be a great thing, like you said, for the annual review, but also when it comes time for open enrollment like this. Whenever you're having a just my thought as a business owner, whenever you're having a major event with your company, where you're dealing with the employee issues, this would make a lot of sense.
Right. Well, my wife works for the school district, and she gets one mailed to her, and you open it up and you take a look, and it's impressive to see what your employer is actually contributing towards you and your family. So it lets the employee know that, hey, my employer's got my back, or this is what they're really paying for me to be an employee here. So it's impressive.
Good stuff. We're going to continue our conversation with Travis Robinson when we come back. Also, can I assume the existing mortgage in divorce? You can reach me anytime. Our off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, it could still be costing you thousands per year? The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@ronsiegelradio.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Better Outcome segment today being brought to you by mycdlp.com, mycdlp.com. Can I assume the existing mortgage? That is our subject. Can one spouse assume the mortgage, releasing the ex-spouse from future liability? With rising mortgage interest rates, many divorcing homeowners ask, can I assume the existing mortgage? By assuming the existing mortgage, they hope to eliminate the need to refinance while keeping their current mortgage terms. If only it were this easy. An assumable mortgage is a loan that can be transferred from one party to another with the initial terms remaining in place. Not all mortgages are assumable. In most cases, the only assumable mortgages are FHA, VA, and USDA home loans. Conventional loans are not typically assumable. Mortgage assumptions still require the current lender to approve the new borrower's creditworthiness and ability to repay the mortgage. It isn't as simple as one party agreeing to take over the mortgage. When transferring ownership of the marital home to a non-borrowing spouse, steps are needed to avoid an acceleration of the due on sale clause of the existing mortgage note. Although the marital settlement agreement may determine who retains ownership of the marital home or other real property after the divorce is final, it is crucial to understand that the deed, decree, and debt are 3 separate issues to settle. The deed and transferring ownership. A property owner can transfer their ownership of the real property to another party using a quitclaim deed or other instrument. When both parties are co-mortgagees on the mortgage note, no further action is typically needed when retaining the current mortgage. However, it is essential to take action and notify the current mortgagor of the ownership transfer to avoid an acceleration of the mortgage due to a transfer of ownership when the party retaining the home is not obligated on the current mortgage note. Word of caution: if the vacating spouse wants to remain on the deed to the real property until their name is removed from the mortgage financing option available to the vacating spouse may be limited. Please give us a call to determine the impact on the vacating spouse. The Garn St. Germain Depository Institutes Act of 1982 protects consumers from mortgage lenders enforcing the due on sale clause in their mortgage loan documents when the transfer of ownership includes transfers to a spouse or children of the borrower, transfers at divorce or death, the granting of a leasehold interest in 3 years or less not containing an option to purchase, and the transfer into an inter vivos trust or living trust where the borrower is a beneficiary. When one spouse is awarded the marital home and ownership is transferred solely to that spouse, leaving the current mortgage intact, the receiving spouse agrees to take sole responsibility for the mortgage payments through the assumption process. A loan assumption allows a transfer of ownership and leaves the loan intact at the same time, same interest, loan terms, and balance. However, legally assuming responsibility for paying the existing mortgage is often confused with loan assumption, where the original mortgage is released, or the original mortgagee is released from further liability. Want more information on this? Give me a call, 800-306-1990. Don't forget to get your free DYM workbook, mydymworkbook.com, mydymworkbook.com. If you want this full article, again, give me a call at 800-306-1990, 800-306-1990. That is the Better Outcome segment, brought to you by mycdlp.com, mycdlp.com. Continue our conversation. We're chatting with Travis Robinson today, talking about why you want to do, what's the benefit? Why do I want to find a great broker for my company's health benefits? You know, I got Kaiser. I'm giving everybody Kaiser. I'm offering Kaiser. You know, what's the difference between going to Travis and going to the guy that was homeless last week and is now selling health insurance?
I think the biggest thing is knowledge. I mean, we're very good at what we do. And like I said, right now, business owners, if you have 2 employees, if you have 200 employees, we're helping them save quite a bit of time and money. There's a few networks out there and few carriers that are coming in very hot as far as saving time and money, or saving money. So right now, on average, we're saving about 15 to 20% a month on their benefits.
15 to 20%.
Yeah. That's what that does is we take the census and then we talk to the employees and find out what doctors are utilizing, and then we can match them with certain networks. And so they're not in a huge network, but if your doctor's in a smaller network and you can save $200 a month, why not utilize that smaller network?
Especially if you've got a number of employees and you do $200 a month per employee.
Right.
That starts being a big number.
Right. Yeah. And we take the time, our staff, we go through, we can search the networks. A lot of larger firms won't do that. They just provide a price and say, this is it. But if we can put an employee in a smaller network, and like I said, if their doctors are in that network and they're fine, there's not going to be any interruption in their service, then why not put them on a smaller network?
And I don't have a choice anyway as the employee. I just get, you get what you get and you don't pitch a fit, so to speak.
Well, we'll sit down during our open enrollments. My team will sit down one-to-one with all of your employees, talk to them about any special medications they need, what doctors they might need. So you can offer a full network and a reduced network, and it's up to the employee. Do you want the full network? But
I was going to say, it seemed to me like you're putting the cart behind the horse behind the cart, or however that goes.
No,
because if you're talking to the employees at the open enrollment, hasn't my employer already made the decision?
Well, the employer can make a decision. I want to offer a full network or a reduced network. And a lot of times we advise them to offer both. offer them both. And if your employees can make the decision, and if they can see that their doctors are in the reduced network, and it's going to save the employer money and the employee money, it's a win-win.
Gotcha.
Yep.
Talk to me about this one now. What, being that you're the expert in this arena, I'm an employee working for a company, and my wife works for a different company.
Mm-hmm.
She gets health care, and I have health care. Should we be on one? Should we each be on both? How does all that work?
It kind of comes down to what your employer is contributing. So if you're working for someone and they're paying 100% for employee and 100% for dependents, which we have, then there's no need for you to be on your employer's coverage. But if you really need to take a look at that, and we can educate people on that as well. It's like, let's take a look at the percentages of what your employee's contributing, also for dependents, and it might make sense for you to be on your employers, and then your spouse to be on their employers.
So then you'd end up with different coverages,
right? Yeah.
Okay.
Yeah.
Now I'm going to ask you. I'm going to throw a curve. I think I'm going to throw a curveball at you. Just from a employee's perspective, and you probably know this better than anybody, because of the work that you do as a coach. If I go out of state, out of country, and I get hurt, does my insurance coverage follow me?
Depending on the plan. If you're on an HMO and you're in a state that does not take HMO, you're covered for emergencies.
Okay.
If you're on a PPO and you're out of state, then you can find places that will take that coverage. Yes. So it just depends on the plan design. And if, that's why we really like to sit down and talk to the employees. If you're doing a lot of traveling, we don't want to put you on an HMO. We want you to be, but if you are out of state and say you have Kaiser, and you say you're in a state that doesn't even have Kaiser, you're 100% covered for any emergencies. So if you get in a car accident and you get transported to the ER, your insurance will kick in if you have Kaiser, no matter where you're at. But you can't just go. You can't go and get a cold you can't go if you have a cold. You can't just go to the doctor. But a lot of the carriers also have telemeds where you can call into a doctor, and a lot of employers don't know that either. But
that sounds like a big benefit from one of the biggest benefits I've seen from COVID.
Yeah.
Not the least of which where we've been able to do different types of radio shows, but that's a whole different story. But the teledoc, I think was really, really enhanced during COVID when they didn't want anybody showing up at the doctor's office. You can actually have your doctor now in Montana.
Yep.
And it doesn't matter. So is that a different kind of coverage then?
No, a lot of the carriers, Anthem, Blue Shield, they will offer that as a added service.
So it's almost like a urgent care.
Pretty much, right? Yeah, with technology, a lot of carriers are offering it. There's no additional cost for it. We do have supplemental coverage that you can buy, through Colonial or other carriers. Where you have similar. If your carrier doesn't provide it or your plan doesn't, we can get it to you for sure.
And then we can also go. Everyone always goes to their favorite Aflac.
Yeah.
Just because of their commercials, right? I mean,
Aflac's, there's nothing wrong with Aflac. We work with other carriers because of service and product.
And there's a big issue right there also that most of us don't even think about, is the concept of the service, right? Like I said, I was at this event yesterday listening, and the presenter was talking about they know which of the carriers are good, which of them are bad, because of how many calls they get, and you probably don't want hate calls.
Absolutely not. So we tend to work with carriers that are employee friendly, but most of them are. We really don't have a problem.
And you're able to kind of guide them to the right direction.
Absolutely.
And that's another big issue that we're always looking for, because what we really want from you is not only, obviously price is an issue, but we want that experience that you're bringing.
Yeah.
Right. I can go online and find price. I can't go online and find experience.
Well, and my staff is bilingual, so we can help with that, and we're all licensed, so that makes a big difference. We're experts in what we do for sure.
A lot of good stuff. If your company's looking, or guys, if your company's in existence right now, you should be looking. Right? If you're not already working with Travis, you should be looking, calling him. Give me a call, 800-306-1990. Here's the other issue. You can work this from the other angle. If you're listening, if you're in the sound of my voice right now, go into your HR director and say, hey, I was just listening to Ron Siegel radio and I heard this guy Travis on the radio. You need to call and talk to him.
Absolutely.
Right? So you can, if you are the HR director or if you know the HR director, have them give a call and we'll put you in touch with Travis Robinson and his team. See if they can save you that 10 to 15%. And then ask your employer to share a little bit of that with you. I just throw that out there, right? I mean, if you're helping save the company thousands of dollars, maybe they can throw a little bit of it your way. As always, I appreciate it. If you want to talk to Travis, give me a call, 800-306-1990. Happy to put you in touch. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
My boss just pushed me over the limit. I'd like to call him something. I think I'll just call